The Fed's firestorm. What's at stake for the markets? The recurring whispers of President Trump removing Federal Reserve Chairman Jerome Powell have not faded. In fact, they've intensified, keeping financial circles in a state of unease, while President Trump has publicly downplayed immediate plans. His reported discussions with Republican lawmakers, many of whom endorsed the idea, signal a profound tension. This isn't just political rhetoric, it's a direct threat to the very foundation of U.S. economic stability. Should President Trump make the unprecedented move to dismiss Powell, despite legal constraints, and Powell's intent to serve his full term, the impact on Wall Street and the broader financial system would be devastating. If the Fed's monetary policy decisions become politicized, there's a significant danger of increased inflation. Unlike past presidents who might have applied private pressure, President Trump's public criticism sets a dangerous precedent, risking the softening of opposition and potentially ripping the fabric of the universe. Powell would become a martyr for central bank independence and the US's reputation. Its banking and financial system would suffer profound damage. This act would fundamentally challenge the institutional integrity that underpins the U.S. financial system and, by extension, the global financial order. Wall Street would undoubtedly find itself in treacherous, unexplored territory. The examples of Turkey and Argentina, both with politicized central banks and double-digit inflation, serve as stark warnings. Political interference aimed at prematurely cutting interest rates as President Trump desires could unleash an inflationary surge, triggering a collapse of the currency and bond market. This independence is not a luxury. It's considered absolutely vital for managing inflation and ensuring both financial and price stability in the United States. Firing Powell would be a blatant attack, casting serious doubt on the Fed's ability to act free from political pressure. Experts warn that a loss of central bank independence can lead to a collapse of the currency and the bond market. As inflation expectations soar and broader risk premia increase, such a move would undeniably shatter investor faith in a long-standing system that underpins the global financial order. We've already witnessed a preview of the chaos. Initial reports of a potential removal sparked a 0.74% decline in the S&P, 510 basis point surge in the 30-year Treasury yield to 5.07%, and a weakening dollar. This immediate market reaction underscores the fragility and the depth of investor fear. Wolfe Research anticipates not just an equity sell-off, but a counterproductive spike in long-term yields. A core casualty of such an action would be the Federal Reserve's cherished independence. The legal landscape surrounding a presidential removal of a Fed chair is entirely unproven. If President Trump were to proceed, Powell would almost certainly sue, setting off a complex and messy legal battle. This legally untested scenario could escalate to the Supreme Court, prolonging uncertainty and leaving markets in a state of suspended animation. The very image of a Fed chair potentially being escorted out, while attempting to remain, would create an unsettling spectacle, further destabilizing investor confidence. The potential for heightened inflation risk is a major concern. Central bank independence is critical for price stability. Beyond the domestic turmoil, a dismissal of Powell would inflict severe damage on America's global image. Money explainers.